Hey guys, what's up? How's it going? My name is Rob and welcome back to week number 2 of the Canadian-based dividend growth investing case study. So if you guys missed the first video, be sure to check that out. I'm going to be linking a playlist of all these video series together so you guys can watch them one after another on the YouTube channel. It'll be on the YouTube channel homepage as well as in the description of this video. But anyways, guys, if you guys missed it last week, this is me building a brand new Canadian dividend growth based portfolio completely from scratch and documenting the growth and everything I'm doing along the way with these weekly update videos. In these videos, I'm going to be showing you guys what stocks I'm going to be buying. I'm going to be building out the portfolio. I'll show you guys the dividends. I'll show you guys the growth. I'm going to be 100% transparent and show you guys everything and all the steps along the way. And in each video that I do for this case study series, I'm basically going to also be focusing on some topic when it comes to dividend investing so we can learn and educate and kind of, learn about dividend investing and growth investing together as we go through these videos. So it's going to be perfect for beginners, anybody who's just getting started. And if you guys like these videos and you guys want to support the channel, there's a few things you guys can do. So the very first thing you guys can do is like the video, and as well you guys can subscribe to the channel so you guys can be notified of when I publish these videos. Like I mentioned earlier, I usually do these videos about once a week or so. I'm looking for a weekly update. I think that's pretty good, and I think that works quite well for most people. The other thing you guys can do to support the channel is check out some of the links in the description of this video. I'm going to be building this portfolio with Wealth Simple Trade, so if you guys want to open a Wealth Simple Trade account and follow alongside with me, you guys can do so, or you guys can build your own portfolio. I highly recommend you guys get started if you already aren't set up with investing, and there's lots of great options for you. If you guys do use my link, you will be credited with $25 if you meet the minimum deposit. So once again, link in the description of the video if you guys want to open up a Wealth Simple Trade account. And the other way you guys can support the channel is by signing up to Blossom. Blossom is an app that I use to get feedback. I do posts. I'll share lots of information, and it's a great way to kind of basically interact with each other. We've kind of built a cool little Canadian-based investing community on Blossom, and of course on Blossom you guys can see all my stocks, all my holdings, everything is 100% on there, and it's free for you guys to access. All you guys got to do is download the app, and there is a link in the description of this video. So just really quickly before we go any further in the video, we'll do a quick little portfolio update, the very first portfolio update of the account. So this is our RRSP here that we have on Wealth Simple Trade. This is the portfolio. This is the first update. So the only stock we have right now currently inside the portfolio is ATD. That's Alimentation Couche-Tard. So we bought last week. We bought $100 worth of ATD, and currently at the current moment, the portfolio is down -1%. So we did see a bit of a dip inside the portfolio since we last bought the stock. But of course, we just started this case study, so none of that really matters. But once again, guys, I want to get in the habit of doing these weekly updates to show you guys how the portfolio is doing. And of course, once the portfolio grows, we get more stocks, we have more time. You'll kind of see that the stock growth, and it'll get a lot more interesting. So in the first week of doing this investing case study, we focused on dividend growth, and I show you guys how important dividend growth was basically for a dividend growth portfolio, and it makes a lot of sense. But I give you guys an example, and I show you guys that we are looking for lots of growth inside this portfolio. We're focused on dividend yields, we're focused on dividend companies, but we're also focused on dividend growth. So that was the first video in the series. The second thing we're going to talk about today is going to be diversification from a dividend investor standpoint. So one of the biggest reasons you want to diversify your portfolio across different stocks and different sectors is because there's lots of things that can happen in the world and in different sectors and different situations, and even in different individual stocks. You want to basically make sure that your portfolio is growing over time, and by diversifying your portfolio, you set it up so you're always constantly growing those dividends, your companies are always doing well, and you get your toes in lots of different markets. So if a market sector like tech or finances do really well, you also take off and do really well. And when it comes to dividend stocks, we want those dividends rolling in. We want those companies to do well. We want those dividend growth rates to keep increasing. And the way we do this is by having companies and having lots of diversification. So if a sector goes bad, if different world events are going on like wars, or if there's COVID or something like that, and certain sectors get really hit, we want to kind of limit that risk inside of our portfolio. We want to have a bunch of different sectors to take advantage of that. So when something like COVID happens and retail and all those different stocks do really well, we want to hold those stocks inside our portfolio, as well as the ones that maybe don't do so well as well. But the big focus here is once again diversification, diversifying the portfolio, and having lots of good companies, lots of good growth, and always have our companies growing on a regular basis. Whether the economy is in the poops or it's doing well, we want those companies to grow, and we want to get that dividend income coming in because it's so important for the growth of the portfolio. So with 20 stocks inside a portfolio, we're basically looking for an allocation of around 5% each. We can see here that we only have one stock inside the portfolio, which is a stock we bought last week. We will be buying 2 stocks inside today's portfolio, adding 1 new stock inside the portfolio. So we have ATD, Alimentation, Couche-Tard. We're looking at about 5% for each stock that we hold. Of course, since the portfolio is new, we're not really too concerned about this. As we build the portfolio, we add more stocks, we flesh things out, then we can kind of worry about, setting up the allocations to be correctly and using a tool to do so. But until we kind of get more stocks, I'm not really too worried about it for now. So for the next part of the video, we're actually going to be focusing on the stocks I'm actually going to be buying inside our dividend-based portfolio. So a couple of days ago, I did a poll on the channel asking you guys what you think of 2 railway stocks in Canada. That's CP, Canadian Pacific Railway, and CNR, Canadian National Railway. And some of the results we got were pretty interesting. So I asked you guys, which one would you prefer from a dividend growth investing perspective? And we have 76% people voted on the YouTube channel in favor of CNR, while 24% voted for CP, and that was a total of 258 votes. And on Blossom, we have basically somewhat similar results. We had 68% of people voted for CNR and 32% for CP, and now it's 530 votes on Blossom, which is absolutely crazy. I just want to say a big thanks to everybody who takes the time to do these votes. It's really cool to get your input and to kind of build this dividend portfolio together. And I thank you guys for all the tips and basically for doing the votes for the channel. I do agree that both of these stocks are incredibly good stocks. You could buy either one, but I'm probably going to have to agree with most people. I think the stock that I'd probably go with and I'd be the most comfortable going with is CNR, although CP definitely is a growth play, and the company has done well, and I think it could do well. But for this dividend investing case study, I think we're going to go with CNR. All right, guys, so here's a quick little primer for CN or CNR, whatever you want to call it, here on the website. So there's lots of cool information here, but just to maybe give you guys a quick little rundown, it's one of Canada's biggest railways, and the railways are so important for us because they transport goods. And over the past couple of years, I think with everything that's went on with the world, the shortages, different supply issues, COVID, we've kind of really seen these stocks do really well because of that, and we've really seen how essential they really are to our economy and whatnot. So there's a cool little investor fact book that you guys can find on the website. Basically goes over some different information about the company, gives you guys a nice little introductory. There's all kinds of cool things about the revenues, the financials and stuff like that. So this is a really cool fact book, and I love when companies show this so you can kind of get a quick little bird's eye view of how the company works and some different things. So here's the map of the company and basically where they go throughout Canada as well as the United States. So they go all the way down to the south of the United States here. So you can see the different places they go all the way across Canada. We can see some cool things like the route miles, the revenues, the employees, all these different things like that. So once again, the railways are super important for the economy. It's super important for the supply distribution in Canada, and we've really seen over the past couple of years how important they've been for just keeping the country going and how well the companies have been doing. Like, these companies have been some of the best performing companies in Canada because they're so essential. So let's do a quick little overview of CNR stock here on Google so we can look up some quick little metrics of the company here. So it's Canadian National Railway, or CN. You guys can call it whatever you want here. Ticker is CNR, and it's currently trading at $154 Canadian on the TSX. So it's not a cheap stock by any means, but I mean, again, the value is there. If you go over the past year to date, we'll look at the company. It is down at -5%, so a little bit of a decrease this year. The 1-year return is up 6% since that would be the beginning of July, or July 19th to basically the same date today. 5-year return of the company is up 36%, and the max return over time is 7,197% growth. And this is really very, very consistent company. Like, if you want to look at the differences between CNR and CP, is basically that CP is more of the growth opportunity, and I think a lot of people kind of basically, when I did the poll, that's what a lot of you guys said, and I think that's a perfect way to frame it. CP is more growth opportunity, but CNR is more consistent. So you guys can kind of decide which stock is right for you. But market cap for CNR is $105 billion. I mean, 105 billion, sorry, not dollars. So it's a pretty big market cap, and the dividend yield is 2%. So it's relatively low dividend yield. We're looking at a company that's probably more in the growth stage of increasing that dividend, but we're going to take a peek at that because, as you guys learned in the first video, dividend growth rate definitely matters when it comes to a dividend growth based investing portfolio. So like usual, we'll use a handy dandy chart to kind of basically show the growth over time. So here's the company way back in the early days where they had dividends were pretty much non-existent. Or really, really low back then, and there's been consistent growth. A lot of growth kind of popping up around 2011, 2012. We've seen consistent growth, and the projections for dividends, obviously, in the future is going to be pretty big. So there's a lot of future projections there. We'll take a quick little peek at the overall DGR3, which is a 3-year average return, about 10%, which is kind of in that kind of good range. You know, it's nothing crazy, but it's a good range, sustainable. And then DGR3, R5, which is the 5-year average dividend growth rate, is 11%, so a little bit higher. 10-year is 14%, so lots of good quality growth. Average dividend growth rate of 10-year of 14% for 10 years is solid. And the DGR20, which is 20 years average dividend growth rate, which is kind of cool that we have that information, is 17%. So, you know, I really highlighted consistency here. That's where that consistency is coming from. 20 years of 17% dividend growth rate per year, which is absolutely crazy. We could take a peek at things like the payout ratio. The payout ratio is still around that 36%, which is relatively low. And, you know, we can also kind of guess that from the low dividend yield, right? It's not a crazy high dividend yield. It is lower than ATD, Alimentation Couche-Tard, which is the one we talked about before. But this kind of shows you a stock that's kind of in the middle, right? It's not like such low that they can increase it crazy amounts like ATD can, but it's still kind of established and they can still increase it at a solid rate, right? You know, so that's basically what's going on there. We can look at the dividend history as well to see the dividend increases year by year, and we saw a couple big years. Basically what they do is in 2023, basically this year, we've seen an 8% dividend increase. 2022, we've seen an increase of 19%, which is a big increase. 7% in 2021, and then 2019, 18% increase. So every second year they're like giving a big increase, and then the next year we're giving it, you know, a fair increase kind of thing. And we can see those dividend increases coming up here on a chart, which always looks really cool. And it looks like the dividend increases come at the beginning of the year, the first quarter of March. So the end of March, they do their dividend increases. And again, you guys can just take a peek here. You can see the numbers here, just consistent dividend increases across the board, which is always a big thing that we like to see with the company. So let's go inside our Wealth Simple Trade portfolio and let's buy our stocks for today. So here's the RRSB account. I put $100 in once again for this week, $100. That's what we're going to kind of shoot for. Not every single week we're going to hit that because of course, you know, different things happen, but that's our goal for now. So once again, there is a bug with Wealth Simple Trade. Whenever you put money in for that day, it counts it as a return. So it's showing us that we have 99% return for $99. That's just a bug. It takes about a day or so, and then it, you know, the deposit doesn't count as part of the return. It's some weird bug with the software. It's basically existed for years, they never fixed it. So just ignore this return part here, and let's focus on the stocks here. So I told you guys I was going to buy 2 stocks. So I'm basically going to split today's deposit between the 2 stocks we already hold. So we'll go through, and ATD is going to be the first one. So we make sure we have the RRSB selected, and we're going to go fractional buy, and we're going to put about $50 in. So that's going to be $50 Canadian. Put that in for ATD. We'll put that through, and then the other stock, of course, like you guys already know already, is going to be the CNR inside the RRSB. So we have $50 there. That's going to go through at the end of the day. And whenever we search for new stocks on Wealth Simple Trade, we just can go up here at the very top. We can type in the ticker. You can type in the name of the company or the ticker, but the ticker is always the easiest way to do it. Canadian National Railway, that's the one we want. And we're going to do a fractional buy at $50 as well, and make sure this is inside the RRSB. And actually we'll go 50.16 cents because we want to use up everything in there. And that's the beauty about fractional shares. It lets you buy, you know, higher price stocks. So it's a good way to split your stocks, which is always kind of cool here. So as of right now, we got 2 stocks inside the portfolio, guys. That's one for the consumer based stocks, and then we have one for the railways. So I'm just going to refresh the page really quickly, and that trade should be updated in here. Actually, no, it's going to be done at the end of the day because it is a fractional buy. So we'll have to wait till the end of the day. The trade for CNR will go in, and then we'll have CNR and ATD as 2 stocks inside of our portfolio. So before we close out the video here really quickly, I just want to do a quick little recap of what's been going in the markets over the past week or so. It is the 19th at the time of doing this video, and you guys will probably get the video published on my channel sometime later today. Just finishing some things up, the editing and whatnot. But just a quick little recap of what's going on with the markets. So the Canadian markets have been kind of interesting. We're going to go to the 7-day return so we can see what's happened over the past little while. So nothing too crazy. You know, we talked about CNR and CP for this week. The railroads looks like CP is doing pretty good. CNR is kind of just doing its thing. Some other stocks that have been doing really well is the basic materials. We've seen some stocks down here doing pretty good in terms of growth. Nutrien doing quite well. And the other big thing that really catches my eye is the financial stocks. We see the banks doing really well. TD up 3.85%, CIBC up 4%, Bank of Nova Scotia, like they're all doing really good. And also some of the financial stocks as well, like POW, Manulife, they're doing pretty good too. Also, you know, some of the consumer stocks like Loblaw and whatnot, Metro, we see some green across the board. And yeah, so, and actually even tech doing quite good. And this is just the Canadian markets. The US markets have also done quite well. We've seen significant gain inside my regular TFSA as well. But just a quick little recap on the markets, guys. And that's going to be it for today's video. So take care. Hope you guys enjoyed the video. If you have any questions, let me know in the comment section. Take care, and I'll see you guys later.